reserve idea. You know, the idea that I'm going to have on the balance sheet, I'm going to have a liability, an estimate, and then I'll have a loss on my income statement that is an estimate. So this year I record that loss and hit the balance sheet, and every other year I make the actual payments out of that liability. So that liability will go down, but it may take 10, 20, 30 years for it to go down. But the hit to the estimate is in the year that that event happens. So for BP, that was 2010 when they had the oil spill. For GM, that was in 2014 when they decided they were going to recall all those cars and fix all the ignition switches. That's the date you get the estimate, and again, then the actual is going to actually get paid out and draw down that liability. But the nice thing about doing contingencies is once that estimate clears through, the next year's look clean on the income statement. There's no impact. So even though BP is still paying for the Deep Horizon oil spill, their income statement doesn't show anything on it at all. Okay. Yes.
Okay. I've been struggling with this because they are paying cash. Mm-hmm. Is it showing up on the statement
cash flow? Yeah, it'll show up on the statement of cash flows, which means it's gonna, basically they're gonna be paying off liabilities. So we're talking primarily financing type activities. So it does show up in the statement of cash flows, which is why you want to check very carefully how they're doing generating cash. Can they cover all the losses that they actually have to pay out with the cash that they're generating? But it doesn't show up on the income statement. The income statement may look great growth and everything looks perfectly fantastic when the reality is no, because they've got all these cash liabilities that they're in. The capital leases, again, versus operating leases. Basically, what you need to understand is that with a capital lease, you're going to have an asset that will be depreciated and a liability or a note that will have interest reported on it. Whereas with an operating lease, you simply have rental expense. Over time, the amount you take for depreciation and interest will equal the rental expense over the life of the lease. In any given year, my depreciation and my interest expense might be different than my total rental expense, but if you looked at the amounts that are going to hit the income statement, wouldn't matter whether I call it an operating lease or a capital lease. It's when does it hit the income statement. So again, this is a variant on capitalizing versus expensing, because you've got rental expense in the operating, which means no balance sheet impact. The capital lease has both an asset and a note, but it's also got depreciation and interest expense. So you're going to have both of those that end up hitting your income statement at some point in time. Capital lease is much slower. A lot of companies don't like capital leases because they don't want the liabilities on the books. It also impacts how they can raise other debt. So if you've got a lot of capital leases and you have to put them on your books, you've got a lot of debt on your books already, you can't borrow any more without paying a premium. It's also sometimes hard to sell equity because it looks like you're really risky when you're actually using a leasing mechanism. That's why companies try to structure their leases to be operating leases. Yeah.
These are actual leases, like say a building, you lease a building, you can choose to show it as a rental.
Well, there's actually a rule. The rules are basically, if there is a bargain purchase option, if the lease transfers title, if the lease is at least 75% of the life of the asset, and if the price of the lease is at least 90% of the cash price, then we call it a capital lease. The first two, most leases don't contain a bargain purchase option, and most leases don't transfer title. This third one says if you are leasing the asset for most of its life, then you're really buying it. And this one says if you're paying 90% of the cash price, you're really buying the asset, even though in these two, you don't get the asset. That's what's really weird about it. You don't get it, you don't get to keep it, you just have financed it in that manner. And from an accounting standpoint, we then say you have to treat this as if you were buying it.
you go through the bargaining purchases? What is that?
Yeah, the bargain purchase option is, the lease might say at the end of the lease, for $1 you can purchase this asset, or for $100 you can purchase the asset. It's not its fair value at the end of the lease, it is just a bargain. So, a lot of times it's just a way of transferring title, but getting a little cash for it. What makes it a bargain purchase option is anybody's gonna take it and turn around and sell the asset and be able to make money off of it. So if the fair value is like 1,000 or 2,000 and you can buy it for 100, you're gonna say, yeah, I'm gonna spend the $100 because I can turn around and sell it immediately for 1,000 or 2,000, and I'm gonna make a lot of money off of it.
Okay.
Okay.
The other question goes back a little bit, but if you were to ask like a fraud question on the exam, let's say inflating inventory
Mhm.
related, you would say the tool company, Illinois Tools, is on this is what's showing like on their net income. How could it have gotten here, or I guess how
That's a
would
good way to ask the question. I can ask it in all sorts of different ways. One way would be simply, if this company was fraudulent, what would you expect, would happen to their net income, to their ending inventory, that type of thing. Another one might say, and I think I've done this in the past where I've said, assume that the company decides their net income isn't high enough and they want to add blank to their bottom line. How can they do that in creating fictitious inventory, and you can kind of work through the numbers.
Okay.
So sometimes I just kind of ask kind of a conceptual, what would happen to the financial statements if they were doing fraud. Other times I might actually give you the numbers to kind of work your way through. So it could be either one on that. Yeah, I have nothing but how to word questions differently, since I have a finite set of questions that I can really ask. You just have to figure out what that finite set is. Or read my mind, whichever the case may be.
That's why we're gonna have a call with Mike tonight, and